Hello guys, welcome back to Zodiac Trader. Today this is the last episode of price action strategy, and today we're gonna look at the Doji candlestick and other stuff. So let's begin. So as I have mentioned before, uh, candlestick is very important because be able to understand candlestick really helps you to understand the dynamic process and the interactive process of the price. It does really reflect the fundamental of price action because the price is moving on on second basis. So each second will be different. That's why we can no longer evaluate the price through a rather, we'll just put it this way, static point of perspective. We need to measure the price movement with more interactive fashion. That's the reason why we have candlestick, because it allows us to be able to understand the price movement interactively. So here, as we can see, this is a typical Doji candlestick. And as you can see, Doji actually means you have precisely the similar or equivalent price power between the buy side and also the sell side. And you're not actually looking at you're actually looking at the price and like the buying power and selling power reaches to a point where you have no volume on both sides. So that's why a Doji signal typically would mean a reverse signal. Okay, and after we see a Doji, it's likely for us to see another stronger trend or a reverse trend. So there are four types of Doji. So number A would be Doji, the most common one. The B would be gravestone Doji. The C would be dragonfly Doji, and D would be long leg Doji. So in the last episode video, we talked about B and C. We talked about gravestone. As you can see from the name, the gravestone doesn't reflect very positive information. It is rather negative information because it gives you a bad sense of price signal. So the C is dragonfly Doji. That actually means very bullish signal after this Doji. Though that like after the currents of this Doji star. Okay, so D would be long leg Doji. So there are four types of candlestick. Doji means bullish or bearish signal, so it could go out either way. Gravestone Doji means bearish reversal signal, and you can find that in uptrend and resistance level. Dragonfly Doji typically means a bullish reversal signal, and it could be found in the downtrend or the support level. So the long leg Doji actually means either it would go bullish or bearish signal. So the Doji, the first one and the fourth one, they are very similar, except from the fact that a long leg Doji actually means that the price hitting the range of the price could go wider compared to the typical Doji. So Doji candlestick pattern you see here, you see the uptrend, and then you see the Doji right on the middle of it. And after you see this Doji, like the price movement actually go reverse, and then it's becoming like more downtrend. And now you can see this is the engulfing candlestick pattern. You have bullish engulfing, and you have B, bearish engulfing. So basically you see a smaller red one from the beginning, and then you see the green one. That actually means like the market drops a little bit, but then it quickly climbs back. And the B means the market climb a little bit, but then it further goes down for a lot more. So that's so-called engulfing signal. So you will basically found this engulfing signal in different situations. For example, bullish engulfing, you will find that in support level in the market downtrend. And when you try to find a bearish engulfing signal, it could often be found in resistance level, which would be the uptrend. So there are different ways that we can look at these engulfing patterns. So here, this is a Maruti Suzuki India Limited company stock chart. As you can see, this is an uptrend, very typical uptrend. And then you can look at here, this is a bearish engulfing, right? You start seeing the price move up a bit, but it doesn't go a lot. And then the market further crashes. It's very like a very quick and harsh reversal. So when you see the bearish engulfing, that actually means the market could go reversely very quickly and very strongly. Okay, so you see this candle right here. You see a little small green candle versus the red and much longer reddish candle. And here you can see this is a Hexaware Technologies Limited, and you see this is the downtrend market movement, and then you hit to a bottom where you have a bearish candle, and then it is providing a bottom signal. You have a shorter reddish candle versus a longer green candle. Okay, that is a typical pattern of like bottoming signal. So this is Harami candlestick pattern. Okay, another reverse pattern. We call this Harami. So we have bullish Harami, which is typically you start seeing a much stronger reddish bar, and then you see a green bar, a shorter one. Okay, so the reddish bar actually means the market plummeted. You have very strong sell power, and then it slowly go back, slowly go back, and you see a small buying power come back. For the B part, it's a bearish harami. The bearish harami is that you have the green bar, longer green bar, and you have a shorter red bar. So what that means is the price move up a lot and then it drop down a little, right? So you will see that bullish harami. You can find that in the support and downtrend. For the bearish harami, you will find that in resistance level or the uptrend. Okay, so you see here, this is the structure. You have a downward market force. So you have a downtrend, you have a bearish candle, and then you see the price gap up, and then in the 4, you see small bullish candle. So this is a classic harami. You are seeing this a longer red bar with a smaller green bar. And when it goes to the top, which is this is the first one is the bullish harami, the second one is the bearish harami. So as you can see in the uptrend, you see a bearish harami, you start seeing a longer green bar, and then with a lot smaller red bar. So the price stop climb up a bit and then fall dramatically, right? And then you see the price breaking the previous low. So harami is a type of a reverse signal. So you can use all these reverse signal. You can use the Doji pattern. You can use the bullish / bearish engulfing, and also the harami pattern. So there are 3 different patterns, and when you try to print a piece of paper and find that in any stock. For example, Tesla, it has plenty of volatility. It has good liquidity, so you can always uh, put all these patterns, try to level all these patterns on the chart. Okay, so now let's look at the dark cloud cover. So this is a dark cloud cover candlestick pattern. So you see a a lot similar. You have a green bar and also a red bar, and they look very similar. Okay, so the range of the both bar is quite similar, but it's going through the opposite direction. So this is a bearish reversal candlestick that you see the buying power, meaning the green bar, going up at the same time, and then you see the selling power going down, right? So you have precisely the same amount of money to buy and same amount of selling force to sell. So this could be found in uptrend slash resistance level. So typically when you see that, it's another reversal signal. So you see 1, 2, 3, 4, 5. This is a classic dark cloud cover. So you can realize in the first section, this is an uptrend. So in the number 2 area, this is the green bar. And the third one is at the red bar. Okay, you see this gap up. And then you 4, you see the red bar. And the 5, you see the close below 50% of previous days bullish candle. So when you see the dark cloud cover, then you see the similar color bar on the top, it could mean the price is heading to the opposite direction. So here, this is the piercing line candlestick pattern. So this is the opposite of the dark cloud cover. So it could be found in downtrend and support line. And this is a bullish reversal candlestick. So it goes like the opposite way. So this is the piercing pattern. You see a downtrend here. You see number 2, the bearish candle, which is the red bar. And 3, you see this gap down. You see the gap between both bars. The gap is diminishing. So you see much smaller gap. That means the power is, you see different, selling or buying power accumulate. And then 4, you see this bullish candle, which is the green bar. So the 5th, it closed above 50% of previous days bearish candle. So this is a shooting star candlestick pattern, typical one. So you could found this pattern. You have a reddish candle, but you have half of it or more than half of it becoming like a straight line. Means there's no volume on the straight line or whatsoever. And you will find this market pattern in uptrend and resistance level. So this is a bearish reversal candlestick. So it can also called as a bearish hammer or bearish pin bar. So there are different ways in terms describing it. There is, you can call it bearish hammer, or you can call this bearish pin bar, or you can directly name it shooting star. Okay, so actually when you see the shooting star is that you have less buying power than the selling power. That's why you start see the prices doesn't, you don't have a trading volume around this area. It reaches the market high, but then it quickly go down, and it doesn't hit that higher price for twice. So it could only hit that higher price for once or maybe twice, and that's it. And you will never see the price going that high again during the market open. And the market will just close much lower. And the market volume would be concentrated on this red bar area, because that means there are multiple price hit on the red bar section. Okay, so 1, this is the upper trend. 2, this is the upper shadow, at least twice as big as real body. So you see this shadow line, the length of the shadow line is twice as big as the red bar. Okay, you see a longer shadow line. And the third area is that the real body, bullish or bearish, even if better if bearish. So this is a hammer candlestick pattern. So this is the opposite of shooting star. It could be found in downtrend and support level. This is a bullish reversal candlestick pattern. So you are seeing the opposite of the shooting star. You're seeing more shadow, a longer shadow compared to the bar. That means the market doesn't have volume during this shadow line. Okay, you don't see price hitting those area multiple times. That's why this is a reverse signal. So you see this is a downtrend. The number 1 area. The second area is the lower shadow, at least twice as big as the real body. So when you see this, typically you're seeing the price hitting a new low but fail to hit the new low, and it quickly climbs back, and then you have more orders to buy and sell. All right, so when you see that, you know the market's going to hit a reversal. So the third thing is real body bullish or bearish, even if better if bullish. So better if you can find free Dow cloud cover, piercing pattern, hammer, and shooting star. Okay, let's talk about hangman candlestick pattern. So hangman, again, it looks like a hammer, but then you see the shadowy or the shadow line area is a lot shorter. So it can be found in uptrend and resistance level. So it is a bearish signal. This is a hangman. It's like putting a man, you hang a man, so it looks like a hangman, I guess. So that's like a hangman candlestick. And then when you see the market right here, it failed to go up and then just continue to drop. And then this is railway track candlestick pattern. So you have, bullish railway track, and you have bearish railway track. So you typically see this kind of candle around the resistance and support level. So here, this is the uptrend, and you see the price reverse. So you can, either stop loss right here, you can sell stop order right here, and you can take profit target by what? By selling the stock or whatever. So it means that you are making money out of 3 times risk. And here you're hitting another price reverse. So in this blue area, you see the first railway. That you see the very similar blue, like green bar and red bar. Okay, so here you see this and market showing a reverse. And the second blue area, you see another, I call this like bearish railway signal. So you see this bearish signal right here. You have 2 very similar bar color, and then you just hit reversely, and then you hit the bottom. There's the third blue area. So that means another price reverse. So you're seeing the price go up since then. So this is the railroad tracks pattern. They have 2 candlesticks of almost equal lengths that look like railway tracks. So here, this is spinning top. Spinning top means trend is losing its force. So you see you have smaller body and you have longer shadow line. Okay, that actually means the current or the previous market trend has lost its force to continue. So you have a spinning top. You either have a a bullish spinning top or you have a bearish spinning top. So when you see that, could be a bearish reversal or a bullish reversal. So this right here with the uptrend, you're seeing this spinning top and it goes down. With a downtrend, you're seeing a spinning top and then it goes back up. Okay. Another example of spinning top. Smaller body, longer shadow line on both sides, piercing both sides. So try to find free hangman spinning top railway track pattern in chart. So thank you guys. You have finished the entire video of price action. I know there are even more different price signals or patterns, but in this series of videos we have covered almost like every, I would say, most important price signals during the real time, like real life trading. So I hope you guys learning and enjoying the video. Please like and subscribe, and please continue to support me, because without your support I won't have any motivation to make another video, even though I wanted to. So I will see you guys in the next one. Goodbye.